Welcome, ladies and gentlemen, from me, Guy Munson, to our regular 6-minute strategy summary. I spent last week travelling in Australia, where I met with the Australian Treasury, economists and strategists, and the big mining groups, as well as our own clients. I went with 3 questions that I wanted to try and get answers to. The first was to learn a little bit more of the journey that a successful sovereign nation takes to establish fiscal independence and market credibility. No prizes for this question, given the tumult in politics and economics that we're facing here in the UK, which was, by the way, the talk of the town in Sydney and Melbourne. Second, we cannot easily travel to China at the moment because of COVID restrictions, and I always feel that the Australians have a unique perspective on the region, given their large mineral and iron ore exports. I want to learn a little bit more about COVID lockdowns and a little bit more about the pain that we're currently seeing in the Chinese property market. Thirdly and finally, Australia supplied Europe with 81 million tonnes equivalent of liquid natural gas last year, almost 3/4 of Russian exports. And I wanted to understand from their perspective the journey that they see Europe needing to take to establish energy independence and what the outlook is for a tight winter this year and next. I'll cover all these issues in the slides ahead and draw some conclusions for our portfolio strategy. As Britain battles to re-establish its own fiscal and financial credibility, I thought it'd be useful to look at some of the key indicators in the UK compared to Australia as a successful, independent sovereign nation. In the left-hand panel, I've shown the current account as a percentage of GDP. The blue line, Australia, running in deficit for much of the 90s and early 2000s, turns into a substantial surplus, 3.2% of GDP, as metals and mining prices rise and successful exports to China grow. By contrast, the UK, which was in surplus back in the late 90s, has declined into a persistent and growing deficit at 5.5% of GDP. So I think a turnaround in trade is key to the long-term economic credibility of the UK. On the right-hand side, I've shown government debt to GDP. Note the UK and Australia begin about the same at 20 to 30% debt to GDP back in the early 90s. Look how the UK has ballooned, though, through the financial crisis, COVID, and in the latest spending drive, while rising to 95% debt to GDP ratio. By contrast, Australia has risen but managed to cap that GDP at 58% debt to GDP ratio. Again here, good housekeeping and fiscal consolidation, perhaps the message of our new Chancellor Jeremy Hunt, key to long-term economic health. On the next slide, I've shown the Australian to UK government bond spread. And for most of the last 30 years, Australian bonds have traded at about 1% yield higher than the UK, meaning the UK is getting preferential funding costs. The turmoil of the last few weeks, though, has reversed that. And now at that, if you look at that blue line falling to around 0, both countries have the same yield. Again, an important message to the UK about cherishing those low funding costs. On the right-hand panel, I've showed the exchange rate, and you can see there the steady appreciation since the early 2000s of the Australian dollar against the pound. And that strong currency presence, really a key driver of successful sovereign nations. And I think a focus on an appreciating pound over time is a real necessity for long-term economic health. Let's put that together and see what the message is from Chancellor Jeremy Hunt's budget U-turn, which we saw last week. I've shown there the summary of the UK fiscal plan from the Treasury, showing that by 26-27, a cumulative £32 billion will be saved relative to the mini-budget. That's still not enough, but you can see the direction of travel. And on the right-hand side, you can see that has begun to stabilise sterling bond yields. 10-year UK bond yields now down at 3.87 and pushed the pound up from 1.07 to 1.13. And I think Hunt's message is relatively clear. No government can control markets, but every government can give certainty about the sustainability of public finances. And I think the Australians would definitely agree. Second, a brief look at China. You can see that disappointing economic data in the left-hand panel. We've looked at that in repeated past sessions. We're expecting GDP below 3% this year, 2022. And Rio Tinto Zinc were very clear when I visited them. Slowing global demand poses downside risks to China's strong exports while consumers remain cautious of the property market. And that property market looks worrying. This is a chart from the latest IMF World Economic Outlook. And you can see there's deteriorating impacting property sales across China, particularly that green line, the pre-sales of flats and apartments off plan, which do so much to finance Chinese property companies. You can see that now in deep negative territory right back to May 2021. In the panels below, you can see the pressure this is putting on real estate firms. In the left-hand panel, firms with earnings less than net interest rate expenses. In other words, they're going backwards, rising to 40% of all Chinese property companies. In the right-hand side, you can see firms with negative equity now at over 20%. So the message from Australia is this property problem is deep, persistent, and risks becoming a Japanese-style stagnation issue. Thirdly and finally, I talked to the Australians about natural gas, and they, like me, were extraordinarily impressed by the pivot that Europe has shown away from Russian gas. In the left-hand panel, I've shown EU gas inventory levels, which stood at 87% of their storage capacity on the 26th of September. The latest figure I saw this morning is 91. So extraordinarily, they have scoured the world and found LNG supplies. This on the right has resulted in a sharp downtrend in natural gas prices around the world. The European price in blue falling to just twofold increase over the year, the red line for the UK 1.5-fold increase, and the equivalent for the US with of course shale gas at 1.3 times. So as they pivot away, the intensity of the European energy crisis is beginning to lessen, and this is very important. Australia and the companies I talk to believe that this LNG pivot can continue. So just to summarise, it was an extraordinarily impressive trip. Look at the success of a sovereign nation that has grown in the way that Australia has. I think it carries many of the messages from the UK, and I hope will begin us on a journey to more robust finances, good housekeeping, and a solid trade surplus as the long-term goals of an independent nation.